concept of depreciation. So here we will see what is the concept of depreciation. Depreciation concept. So let us understand what is the concept of depreciation. Before understanding the concept of depreciation, let us look at this example. Say there is Messrs. XYZ and he is a manufacturing concern and he is in the process of manufacturing tomato ketchup. So Messrs. XYZ wants to set up a factory for manufacturing tomato ketchup. Now let's see what all he requires. First, he purchased some land, non-agricultural land, then constructed a factory building, then purchased machinery and installed it in the factory building, then purchased some furniture and fixtures for the office or for the use in the factory. So this what all he purchased: land, then he constructed a factory building, then purchased some plant and machinery and installed it, and then furniture for the purpose of office and factory. So all this is purchased for the purpose of the business. Purpose of business, and the life of all this is more than a year. So all these are fixed assets. Now, fixed assets, the life of the fixed assets is over the period of year. So they will be utilized for the purpose of the business over the period of years. So the cost of this fixed assets needs to be allocated systematically over the period of the year against the income. Now this cost of the asset needs to be allocated every year systematically. Year 1, year 2, year 3. Since the cost is very high, we cannot charge it against the income for one specific year. It has to be allocated over the period of useful life of the asset, so that to get the fair view of the income, net income. So this allocation of the cost is known as depreciation. Now, one more thing. Land. When you say land, land is a non-depreciable asset. So there is no depreciation on the land. Now let's assume that the life of this estimated life of the factory building is 30 years. Machinery is 10 years. Furniture is 15 years. So the cost of the factory building needs to be allocated systematically for the period of 30 years. Then machinery which is installed needs to be allocated over the period of 10 years. Cost of furniture needs to be allocated over the period of 15 years. So to allocate this cost of asset systematically over the period of its useful life is known as depreciation, and depreciation is charged on the fixed assets. Now let us take this example further. Okay, say Mr. XYZ has purchased some machinery. Now this machinery is for preparing a ketchup. So this machine is churning and heating tomatoes. So now there are say three main components in this machinery. There is one container, then one induction for heating, and the third component is the blades of the machinery. There are three components, 1, 2 and this is 3 important and major components for this machinery. Now it is assumed that the life of the container is 12 years, this induction is 5 years and this blades is 3 years. Now, since the machinery comprises of three important components, okay, what we do is, as per the Companies Act as well as your accounting standard, what it requires is you need to bifurcate the total cost of machinery into three parts. You need to ascertain what is the cost of component 1, that is container, component 2 induction and component 3, that is blades, and the depreciation needs to be charged on each and every component separately. For example, the depreciation on container needs to be charged for 12 years. Then your induction needs to be charged for 5 years and blades for 3 years. Say the total cost of machinery is 12 lakhs, out of which for container is 7 lakhs. Okay, then this induction is 3 lakhs and 2 lakhs is blade. Then the depreciation needs to be charged accordingly. So 7 lakh cost of container needs to be allocated over the period of 12 years. 3 lakh needs to be allocated over the period of 5 years and 2 lakh needs to be allocated over the period of 3 years. So both your accounting standard as well as Companies Act requires that whenever there is a particular machinery or particular fixed asset in which there are different important components that has different useful life, then the cost need to be bifurcated and then the depreciation needs to be charged to each and every component depending on the useful life of each and every component. Now, depreciation definition. As per Schedule 2 of the Companies Act, depreciation is systematic allocation of depreciable amount over useful life of asset. So now this depreciable amount is the cost of the asset minus residual value or scrap value. Now this residual value or the scrap value is the estimated value that will be received at the end of the useful life of the asset, whereas the cost is the total cost which is incurred for purchasing an asset, and this cost minus residual value is depreciable amount. Now this depreciable amount needs to be systematically allocated over the useful life of the asset. This is known as depreciation as per Companies Act. So now this depreciation comprises of three components or three parts. That is, we need cost, we need to understand what is a residual value, and we need to understand what is a useful life of asset. Let's see this one by one. Cost of the asset. So this cost of the asset will include all the cost which were used for the asset till the asset is ready for use. So it will include your purchase cost plus all the taxes plus transportation and insurance if any, plus installation cost plus trial runs. So whatever is the cost incurred for the asset till the asset is ready for use, this will be included in the cost of the asset. So all this will be your cost of the asset till the asset is ready for use. Whatever is the cost incurred is known as the total cost of the asset. Now see, once the asset is ready, then there might be certain major repairs or replacement. Okay, so this major repairs or replacement in the later stage will be added to the cost of asset only if it increases the efficiency. Now, what do you mean by increases the efficiency? Either the useful life of the asset has increased or it has increased the production capacity. Only then the major repairs and replacement which is done after the asset is ready to use, that is once the asset is ready to use, maybe say after 2-3 years there might be some major repairs and replacement. So this major repairs and replacement will be added to the cost if it increases the efficiency. That is, it increases your life of the asset or improves its quality and the capacity of the asset. Then that major repairs and replacement will be included to your cost of asset. Next, residual value. Now, residual value, as I said, residual value is the estimated value that is estimated to be received at the end of the useful life of the asset. And if it is insignificant, then we can consider this residual value to be nil. The third is your useful life of asset. Now, this useful life of the asset is period over which the asset is expectable to be used. Now, this useful life of the asset can be calculated in many ways. Like you can calculate what is the total production capacity of the asset, and accordingly how many units will be produced in the factory, and accordingly number of years can be calculated. And there are different ways knowing the industry standard, what is the useful life of the asset. In this way, the useful life of the asset can be estimated. Now, this cost is actual, this residual value is estimated, and useful life of the asset is also estimated. So, depreciation is calculated on the basis of these three components, that is cost, residual value, and the useful life of the asset. Now, when we say a depreciation, there are two things. One is we need to calculate the depreciation, and the other one is we need to account for depreciation. Now, for calculating depreciation, there are various ways or methods for depending on the type of the business and the nature of the machinery. So there are different methods in which we can calculate and derive at the amount of the depreciation. Now this needs to be accounted in the books every year. Now for this we need to account the depreciation, and there are two ways in which we can account for depreciation. One is we can directly charge it to fixed asset, and the one is we can prepare a provision for depreciation account or accumulated depreciation account. Now first we will see how to calculate depreciation using various methods. Then we will see what are the accounting ways in which a depreciation can be recorded in the books of accounts. So now let's see what are the methods of calculating depreciation.